reviewed, you should get a decision in a few minutes. So right here it says your approved 103,000 loan. Now today's video, we're dropping more credit jewels. I'm gonna be showing you how you can get a business loan or a line of credit without a hard credit check and without having to provide tax returns. So right here we have QuickBooks. So for those who don't know, QuickBooks is an accounting software. This is something I always tell all business owners. When you get set up with a bank account, the very next thing you should do is sign up with a accounting software, because an accounting software is going to keep all your data organized. Now, before we get into the term loan and line of credit, I wanted to give you a quick overview of how QuickBooks works. This gives a brief description of what that transaction looks like when it's flowing through your bank account. QuickBooks has automatic categorization, but sometimes you have to go in here and actually create different rules on these transactions. So when they come in or they hit your bank account, your accounting software can determine what type of transaction it is. Once we categorize this transaction, it feeds up to our documentation as far as the profit and loss statements. Every single transaction is going to flow up to the profit and loss either as an expense or as income. I know a lot of y'all in the comment section say, oh man, the bank is asking for paperwork. I don't want to do none of that paperwork. If you have accounting software set up, it makes it super easy. You have some of the common reports, a balance sheet, a profit and loss statement, right? This is how I'm going to show you how you could actually leverage your data in QuickBooks to get access to capital, business loans, and lines of credit without even providing any tax returns. They offer term loans and lines of credit. As y'all can see, I got a line of credit right here for $50,000. With these lines of credit and these term loans through QuickBooks, they're not hard pulling your credit because they have all the data that they need in the accounting system to underwrite you. So when you do invoices, let's say you're sending or receiving money through QuickBooks, they have that transaction data. So if a customer pays you over a certain period, they can see you're getting consistent deposits from different customers and they can underwrite based off of that. And the other thing about it is because you're connecting your bank account and all your credit cards, it has a refresh probably every 24 hours so they can see what your updated credit card balance as well as your bank balances, and all that data is validated so they could take that at face value. So if you're receiving invoices through QuickBooks, that can unlock access to a term loan or line of credit. Now, right here it says ready for another loan. You've pre-qualified for $50K or more. Now here's a quick hack. Let's say you do qualify for a term loan through QuickBooks, but what you can do is apply the same techniques as far as the shared secured loans where you pay off 90% of it and then just let the remaining pay over the term of the loan. When you take out a loan and repay it, they're going to come back with even more capital. This is something where you could basically build your credit as well, build your business credit, because WebBank, who is the underwriter of QuickBooks Capital term loans and lines of credit, they report to the business credit reporting agencies, Dun & Bradstreet, Experian, PayNet. They report to all of that. So it'll have a paid off loan on your business credit. When you look at the bigger picture, this is going to open you up for more access to capital down the road. So let's just walk through this real quick. Right here is where you specify the bank account that you want the money to go to, as well as where the repayments will come out. It says select a business account on file. Now remember, when you configure your QuickBooks account, you're going to connect all of your business checking accounts. QuickBooks term loans are issued by WebBank. WebBank pulls from Experian. So a lot of this data is being pulled from your personal Experian soft pool as well as your business Experian. So right here it says application, decision, and if you get an offer, you can accept the offer. It says your application is being reviewed. You should get a decision in a few minutes. All right, so right here it says you're approved. Review your offer before it expires. One step to make this 103,000 loan yours. And QuickBooks Capital, they do not do a hard pull. So one thing I will say with QuickBooks Capital versus, let's say, if you were to go to a major commercial bank, there's going to be different costs of capital. Now, if you go to a major bank, it's usually going to be tied to the prime rate as far as the cost of capital. So it would be prime +2, prime +3, whatever the case is. Right now, you're looking at about 10.5%, maybe 11%. Now, because QuickBooks Capital offers a more flexible underwriting process where you can get approved within a matter of minutes, as I just showed you, the cost of capital is going to be higher. So I just wanted to lay that out there. This is not like going to Truist or Bank of America. It's different. There are some pros and cons with each. You'll get a lower cost of capital if you go to the major banks. However, you would have to provide tax returns, do a hard credit check, provide a profit and loss statement. The advantage with QuickBooks Capital is that you can get a decision quickly because they already have your data. They're not going to ask you for a P&L because they can already see your profit and loss. They're not going to ask for the balance sheet because all that data is already integrated in their platform. You're not going to have to provide bank statements to them because your bank is connected to their platform. So every 24 hours, they can see the latest balance. Now let's go over this real quick. Let's say you wanted to get $100,000 business loan through QuickBooks Capital. This will show you the monthly payment, and their loans only go out to 24 months. No prepayment penalty. So you could repay this early and save on interest. There's no origination fee, and the interest rate, as y'all can see right here, 18.01%. The total cost and interest over 24 months would be about $19,825.61. Basically, let's do 19,825.61. So this is the total interest you would pay if you hold this $100,000 loan to the 24-month term. So let's divide this by 24. So one way I look at this is that it's going to cost you about $826 per month in interest for this $100,000 business loan over 24 months. Now, whenever you're looking to borrow money, you always have to factor in your business model as well as the cost of capital, because in some instances, this may not make sense. So if you were to take this loan, $100,000, total repayment $119 over 24 months, with a lot of businesses, they're putting that money to work. So think about it. If someone gave you $100,000 after 2 years, how much could you turn that $100,000 into? The question you have to ask is, what would the ROI be on this $100,000 over 2 years? And if it's more than the total repayment, then you could possibly justify. And if it's not, that's why I keep telling y'all, QuickBooks Capital is a game changer. Not only can you get fast access to capital with no hard credit pull, no tax returns, no pay stubs, you can also build your business credit. And once you repay these loans, you can get access to even more capital. On top of that, QuickBooks is a tool that helps you get your paperwork in order. From my experience, a lot of people do not have their paperwork in order. So definitely get set up with an accounting software. I know people like to focus on building business credit. Get an accounting software. Get QuickBooks. I recommend. There's other ones like Xero, but just get an accounting software, organize your information. And when that data is organized, banks can make quicker lending decisions. That's what a lot of people don't understand, is the data. That's what's unlocking the capital, because the banks can actually see the transactions coming in. They see it's organized, and it actually paints a picture through your financial data points. They're able to lend money to you quickly. And because they're using artificial intelligence and advanced algorithms, they can underwrite you super quick, way quicker than if you were to go to a regular bank. Let's make financial paperwork great again. Click the link in the description of the video, get set up with QuickBooks, and then you can get access to fast capital through QuickBooks Capital, and it is an absolute game changer. That's all for today's video. Until next time, take it easy, and we'll talk to you soon. Peace.